Your loan officer is friendly. Your loan officer returns your calls. Your loan officer said you're pre-qualified. Congratulations. Let's find you a house. Here's what your loan officer didn't mention. They don't decide whether you get the loan. I did. For 31 years, I was the underwriter, the person who reviewed the loan officer's work after the smiling stopped. And there are 5 things the friendliest loan officer in the world will probably never say out loud, because saying them doesn't help them close your deal. I'm retired now, so I'll say them. Quick ground rule, because I want to be fair. Most loan officers I worked with were decent people, and the good ones are worth their weight in gold. I'll tell you how to spot one at the end. But you need to understand one thing about how this industry works. A loan officer is a salesperson. They typically get paid when your loan closes, not when it's the right loan, when it closes. They're not villains, they're commissioned. And once you understand that, everything I'm about to tell you makes perfect sense. 5 things. Let's go. That pre-qualification letter that made you feel so official? Here's what it usually took to produce it. A conversation. You told them your income, you told them your debts, nobody verified a thing. It's an estimate built on the honor system, and I spent 31 years watching honor system numbers fall apart under actual review. What you want is a pre-approval, and specifically, ask the lender whether it's underwritten. In a real pre-approval, they pull your credit and collect your actual documents, pay stubs, W-2s, bank statements. The gold standard is when an underwriter reviews the file before you shop. Some lenders offer that, and it turns you into practically a cash buyer in the seller's eyes. Why won't the loan officer volunteer the difference? Because a pre-qual takes 10 minutes and gets you emotionally committed to them. The real thing takes work. Never house shop on a pre-qual. Say these words: I want a full pre-approval with my documents verified. A good lender hears that and smiles. It means you're serious. Great news, you qualify for $400,000. Notice what just happened. A bigger loan means a bigger commission, and that sentence is designed to reset your budget to the maximum. Here's what the underwriter knows. The qualification math stretches you to the edge of the guidelines. It does not know your daycare costs. It doesn't know your car is dying, that you like to travel, or that your job has thin years. The approval formula measures what you can pay on paper, not what you can pay while still having a life. 31 years of files taught me this. The buyers who struggled weren't usually the ones with low incomes. They were the ones who borrowed every dollar they qualified for. Decide your own monthly payment ceiling before anyone tells you what you qualify for, and then shop to your number, not theirs. When they say 400, you're allowed to say, we're staying under 340. Watch how the conversation changes. You call 3 lenders. One quotes a rate that's 0.25% lower than everyone else. Winner, right? Slow down. A rate quoted over the phone is a rate designed to keep you from hanging up. The real questions are, is that rate locked? What are the points, the upfront fees you pay to buy that rate down? What are the lender fees around it? A lower rate with 2 points and heavy fees can cost you more than a higher rate with none. And until a rate is locked, it's weather, it changes daily. The tool that ends the games is called the loan estimate. By law, once you apply, the lender must give you this standardized form, same layout from every lender in America, showing your rate, points, fees, and cash to close, line by line. It exists precisely so you can put 3 lenders side by side and see the truth. Loan officers rarely mention that it's a comparison shopping weapon, because comparison shopping is exactly what they'd rather you not do. Get loan estimates from at least 2 or 3 lenders and compare them on the same day since rates move. Make them compete. This one habit is worth thousands over the life of a loan. And the fear they use to stop you, all those credit pulls will wreck your score, is mostly myth. Credit scoring models treat multiple mortgage inquiries within a short shopping window as a single pull, exactly because you're supposed to shop. Verify the current window with your lender, but do not let inquiry fear chain you to the first quote. Somewhere in your loan process, you'll mention something to your loan officer, a gap in your job history, a deposit, an old collection, the fact that your down payment is coming from your parents, and they'll wave a hand. Don't worry about it. Let me translate that from 31 years on the receiving end. Sometimes it truly is nothing, but sometimes don't worry about it means I don't want you to get spooked and walk away, so I'm going to hope the underwriter doesn't flag it. And then my desk is exactly where it got flagged at day 20 of your 30-day escrow, when fixing it is hardest and the stakes are your earnest money. The things buyers are told not to worry about were the things I wrote conditions on every single week. Unexplained deposits, job gaps, gift money without a paper trail, disputes on credit reports. When you hear "don't worry about it," ask one follow-up. Will the underwriter need anything about this? That question tells your loan officer you know the underwriter exists, and files where the buyer is prepared move faster and close smoother. Disclose everything, document everything, early. Surprises are the enemy, paper is the cure. The builder has a preferred lender. The real estate agent has a guy. Sometimes those referrals are great, and sometimes there's an incentive attached. Builders may offer credits for using their lender. Agents refer people who make their deals easy. Here's the nuance the smiling handshake skips. A builder's credit can be genuinely worth taking, but you only know if the deal is good by comparing it against outside loan estimates. A preferred lender who knows you're shopping sharpens their pencil. A preferred lender who knows you're captive doesn't have to. Accept every referral graciously, and quietly get one or two outside quotes anyway. You are legally free to choose your own lender. The word preferred describes their preference, not your obligation. I promised fairness, so here it is. The good loan officers, and they're out there, behave in a recognizably different way. They ask you hard questions up front instead of selling. They want your documents early. They explain the loan estimate without being asked. They tell you things that reduce their commission, like "you'd do better with a smaller loan," or "this program fits you better even though it's more paperwork for me." When you find one like that, stop shopping and hold on. A great loan officer paired with a clean file is how 30-day closings happen. Homework. One sentence. Use it this week if you're shopping. I'd like a fully documented pre-approval, and I'll be comparing loan estimates from a couple of lenders. 9 words of that sentence just told the whole industry you can't be played. Subscribe if you want the rest of the playbook. One honest video a week from the desk where the decisions actually got made. Next up, your credit score isn't the problem. What I read underneath it was. I'm the underwriter. I'll see you at the closing table.